144.21. Casper Marnie in the studio. Let's take a look at the charts here. What level is next?
I'm actually not looking at the upside anymore. As a technical analyst, we go with the trend, and the top of the 3.5-year channel has now been achieved, as I believe the chart shows. We've had a little move above that. I believe yen is traded as high as 70 now, but back trading again lower. I'm looking at the risk to the downside. Everyone's bullish, the market's always most bid at the top. You have to follow the rules and go with the trend, but number one rule is no one to break the rules.
All right, so give us some key levels.
Okay, looking for this level to hold up here, not looking really to make new highs. To sell the cash, looking to put stops back above the highs, or to put out strikes above it on the option side. Looking for the downside for a move to 135, and that very rapidly over the course of the next 6 days.
Can we take a look at mark yen? Do you see the same thing happening here?
Yes, I do, and there's a very strong correlation between the US Treasury notes, the 10-year, and the 10-year JGBs. If you do the spread between the two, there's a 0.8 correlation between those and dollar yen with a 6-day lead. So basically, look at the spread between the two, you have a 6-day lead, and it tells you what dollar yen is going to do next with a 0.8 correlation, obviously 1 being 100% correlation. Now that spread has moved massively lower over the last 6 days. That suggests to me there's a very high statistical chance that we see dollar yen and mark yen move much lower over the period of the next few days. The risk is to the downside.
Casper, stick with us just a second. Nick Parsons, you have something to comment on that, I think.
I think the risk from here would certainly appear to be on the downside. I don't see it to 135. I think maybe 140, 190, 142 the figure. But I know of lots of investors who would absolutely love those levels to come in and re-establish long positions. There was profit taking yesterday. We saw further good sell orders around the 144 level this morning. But I know of orders to buy at 142, 140, 190. And I think really the market would welcome that level. I think the tactic for today is to go square. It's been a great week if you've been long of dollar yen. Go square, give yourself some room to come in and have another go on Monday. If we're wrong, you know, if there isn't a pullback, then dollar yen could be 145.5, 146 on Monday. Well, so what? We can buy it then. I think really the question for investors is whether the next buy level is 146 or 142. And I certainly would not recommend short positions going into it on the off chance that it may happen. I'd recommend a square position from here, take profits, and give yourself room to have another go and make some more.
Casper Marnie, as far as you agree with Nick on that?
I'd say still the risk is definitely to the downside, and I personally am playing the downside in the short term. I believe in the longer term, if the top of the channel can be taken out, and sure, we certainly see dollar yen higher, and it would indicate an acceleration of trend. But from right here, no, dollar yen goes lower.
Casper, let's turn briefly to the mark. Is there any room for plays here with all the dollar yen action going on?
Well, the big question is obviously which is the preferred play, dollar yen or mark yen. So obviously dollar mark becomes the focus because of that. Dollar mark broke an inverted head and shoulders, which came at 179.04. That's triggered this recent move we've had higher, and I think that really is the way of the trend for now. So certainly dollar yen would not be the better play, and mark yen would be the preferred play.
Casper Marnie, thanks very much for coming in today. Well, with all the situation in Japan, what is the hope that Japan can leave Asia out of recession? The international financier George Soros has been speaking about the state of the Asian crisis in the Swedish capital of Stockholm. Mr. Soros says the outlook remains gloomy.
It is clear that the Asian crisis is going to take longer than it appeared 6 months ago. And if you look at individual countries, several have made very good progress in correcting their external balance. If you take Korea, for instance. But they still haven't dealt with the structural problem, which is basically the banking system and the over-indebted companies. And until that issue is resolved, the recovery cannot begin.
Is it necessary with the devaluation in China, do you think?
No, I don't think so, no. But obviously there's a lot of talk about it.
George Soros there speaking on the Asia situation. Well, Gerard Lyons, George Soros is pretty gloomy about the situation. Are we in for an Asia meltdown?
Yeah, quite possibly. So far, the impact out of Asia and the rest of the world has been a positive one. Asia's impact has been to reduce world inflation. But it's quite clear that if there's no early recovery in Asia, then the problems will be negative for the rest of the world. Basically, there's not going to be a positive inflation impact, it's also going to be a negative growth impact. Japan is the key country in Asia. Japan's clearly far from recovery. That means Asia is going to continue to implode. The problems are likely to get worse. That's going to start having a toll, negative toll, on the US stock market soon. And the US stock market is very important for the performance of the US economy. That's why a flight to quality is essential here. The flight to quality has to favour government bond markets in the US, even in the UK, as well as on the continental Europe. Japanese bond market, I think, is past its sell-by date, despite the fact that domestics are buying it. So Asia's problems are clearly going to affect the rest of the world. Fortunately, the US economy is still growing strongly. Fortunately, there is growth in continental Europe, so that hopefully will protect us. But we shouldn't underestimate the potential negative impact from Asia, and that's why there should be a flight to quality, and that's why equity markets, particularly in the States, are going to look vulnerable. And indeed, that's why the yen, despite the fact on economic grounds it doesn't really have to fall much further, that's why the yen still remains vulnerable, and the yen's going to remain vulnerable until there's clear signs of recovery in Japan.
Nick Parsons, you're nodding in agreement there. Is the play now just buy U.S. assets, period?
I agree wholeheartedly with Jerry there, but I think the answer is not buy US assets. I think the secret here is to buy US bonds and to buy US treasuries. It's certainly not to buy the US stock market. I think the impact of Asia is going to be felt through corporate profit margins. It's going to be felt through overall level of economic activity. And at current levels, you have to say that the US stock market looks extremely stretched. Now, yesterday we saw 120 points. That's becoming a fairly routine event. I believe it won't be long. It may be the S&P below 1075. It may be the Dow below 8700. I think it won't be long before we see a correction of at least the order of 10% in the US market there. And I think that will certainly make investors in bonds begin to reconsider what the Fed's stance is. After all, we've got midterm congressional elections in November. If you were to see 10% off the Dow from current levels, or maybe even more, you'd have to ask, would Greenspan really be there, and the rest of the FOMC really be in tightening mode? So I think there's a very good chance that we actually enter into a new trading range for the bonds, and that the markets could start to be thinking maybe 3 or 4 weeks down the track, not just of a reversal of the tightening stance, but in the event of such a market decline, maybe even thinking about the possibility of an ease coming back onto the agenda. Now, at the moment, that may seem like thinking the unthinkable, but the one lesson over the last 12 months, certainly when you look at Japan, is that the unthinkable has to be thought at every moment.
Okay, before we go, Gerard Lyons, I want to get a quick level from both you and Nick. Dollar yen at the end of the year. We're at 144.20 right now.
Okay, pick a number and double it almost.
That's it.
150, 160 level.
Nick Parsons?
Will be 150, having been through 160 in the meantime.
Two economists that agree. Nick Parsons, Gerard Lyons, and Jane Foley, thanks very much for joining us. Also, Casper Marney here in our studio. Thanks very much. Well, that's all for now, but we'll be back with Equities Briefing. That's